Welcome to Global Tax Talks. I'm Will Morris, and we're filming here at PwC's Africa Tax Policy and Business Symposium in Mombasa, Kenya, where I'm delighted to be joined by Rishit Shah, who is PwC's East Markets Tax and Legal Services Leader and a partner in the Tanzanian firm. So Rishit, first question is going to be about Tanzania, which obviously is your home country. So just tell us what the most significant tax policy developments have been over the past short while.
Thanks, Will. Yeah, so just to put some context, obviously, there may be four trends dictating these changes. So first is the global pressure on having a minimum tax and digitalization.
Right.
There's been a significant reduction in donor funds. So again, there has to be, the budget has a gap each year now. The gaps are getting wider and wider, and therefore you need some revenue realization domestically. Third is we have election year. So October this month is going to have, we're going to have election. That needs significant funding as well. And last but not least is infrastructure.
Right.
So we've gone through a phase where we just built the biggest bridge in East Africa. We've just got a mega demo, over 2,500 generating electricity. We're having a whole BRT project. So obviously, initially we thought this year will be quiet, being election year, but then funds are required. So we then have the budget that happens once a year. So a lot of changes come through. So the first change has really been an introduction of 10% withholding tax on undistributed profits. So if that was initially in the bill.
Right.
So if you don't distribute your profits, there's an automatic 10% withholding tax. And then there was obviously lobbying, or those companies, multinational and so on, went. So now they've introduced it as an anti-avoidance provision.
Okay.
So if you don't distribute 30%, then the commissioner may decide.
Okay.
Yeah. Second is obviously digitalization, a very global trend. So there's been taxes that have been introduced on digital tax, but there's also been a significant revamp of the whole filing system. It has been a bit painful as we go through phases. And then maybe the third trend I would say is 3% of the people pay tax in Tanzania. So obviously you can't keep on taxing the same people.
Right.
So what else do you do? So one change they've now proposed, which I think is quite innovative, but how they're going to implement. So the change is that if you pay with your credit card or your debit card, point of sale, the VAT rate, which is 18, reduces to 16.
Okay.
So yeah, I think those are the three biggest changes I would say that have come through.
Great. So busy year so far, but if you look forward now a year, what do things look like? And obviously, as you said, there's an election coming. So
exactly. So changes happen once a year. Elections have happened. Maybe it's less risk for the government.
Right.
That usually is a trend. So we expect quite a few changes that will come through. But what we keep on telling our clients is that make sure you stay connected through your industry groups.
Right.
So for example, if you're, let's say, in the travel industry, we've seen a number of changes come through even in the travel industry in the last 2 years, which have been detrimental. But then the association has been able to go to the revenue authority, engage with them, and reverse those changes, some of them. So it's quite important to keep that dialogue. I'd say meet the commissioner quite often where you can. And you'll probably continue to see the whole digital filing system improve. We've already seen where invoices are being matched on the VAT side, which have reduced fraud significantly, and expect that to keep on progressing.
Right. Great. Okay, so third question. Let's widen the lens a little bit, because you're the East Africa markets leader. So we've heard a lot about at this symposium, is really that one of the barriers to African success is the barriers between countries, rather than the barriers between the continent and elsewhere. So as you look at this region, the one that you see the best, do you see things getting better, staying the same, and hopefully not, getting worse?
So a difficult question, especially being in Kenya. I mean, there's an African saying that when two elephants fight, the grass suffers. And Kenya and Tanzania, coming from Tanzania, we've always seen this, 1 year is good, 1 year is bad. But we've got a common customs tariff within East Africa, which is about 6 countries. But now what Tanzania or some countries have started doing is look at other taxes,
Okay.
because obviously you can't change the standard income import duty. So Tanzania started slowly increasing excise duty on imports.
Okay.
So again, it becomes a non-tax barrier. They've also introduced an industrial development fund recently on certain furniture, for example. So again, these things become a tax barrier. And then at the border, we've seen Kenya stop agriculture items going for some reason, for health reasons, all that. So and then it quietens down. So
Right.
these are some of the challenges that we face, but usually it gets sorted out within a couple of months.
Okay. So maybe staying the same. Anyway, let's keep our fingers crossed on that. But Rishi, thank you so much for joining us. And thank you for joining us, and come back next time so that you stay global tax ready.